Hello, everybody. We are back. We've been on a bit of a hiatus for a little while. Our schedules have conflicted and we haven't had a chance to get together, but now odd timing, I don't know, but the Bank of Canada has struck again today. So welcome back, Jeff. Always a pleasure to have you on. And so give us the scoop.
Thank you for having me on again. Yeah, I think most people consider this to be a bit of an unexpected announcement. I think a lot of people were bracing for an increase later in the summer, not necessarily in June. So, back in March and April, there was announced that they would pause the hikes, not pivot, but pause. So to go and to increase them again today was definitely a little bit of a surprise for I think 70% of economists who were predicting that they would hold it.
Yeah. Yeah. And now it's putting everybody in a position where they need to, either lock in, right, or get reapproved.
You got it. Yeah.
Or do they need to get reapproved now?
Like the good and bad thing is, current clients who are pre-approved to get a mortgage, the majority of them were not pre-approved using a variable rate. But in the last probably 6 months, most people are pre-approved with a fixed rate. Really re-qualify right now. However, this is really hurting the current homeowners, the people who currently have those lines of credit, use some of the line of credit to use as a down payment on the property. This is where it has a pretty big impact on. So, very quick for you. If you have a mortgage, a variable rate mortgage, and the type of mortgage where your payments do increase and decrease based on what happens at the Bank of Canada, $100,000 that you borrow is going to now cost you an extra $15 a month. So if you have a $500,000 mortgage, that's $75 more a month now. So it might not sound like a ton, but it's obviously going to increase a lot more for those with lines of credit and all that fun stuff.
Yeah, and that's pretty significant.
And this is after the other 4% that we've increased over the past year and a half.
Right. So what do you feel is going to happen now with buyers that are actively out looking, that we're optimistic about it possibly being held? What do you think? Do you think we're going to see a decrease again?
Well, a huge question that I've received a lot from sellers is, hey, if I want to move, I have a variable rate mortgage, but I want to move and maybe go to a new lender, switch to a fixed rate, whatever it is. There's a penalty associated with doing that for most lenders. So the penalty just increased a bunch today. Everything has a big impact on this. So the penalty is always 3 months of interest, but when interest rates continue to rise, the penalty is going to continue to rise as well. So I'm wondering, I'll ask you about this as well, but lack of inventory, I don't think that is going to be, I think there's going to continue to be a big lack of inventory in the market, which will probably continue to drive up prices. What do you think?
Right. I do think, I feel as though the market obviously needs more inventory. It always does. But I feel like it's the lower priced homes right now, because it just seems like everybody and their dog can only afford X amount, right? So in a sense, it's sort of still driving the prices sort of a little bit above for those types of homes. But I think that the more expensive homes, $750 plus or whatever, unless it's a great deal, I don't think they're going to fly off the market. That's kind of how I feel.
Yeah, no, that sounds pretty accurate. And the other thing that doesn't make the news as much, but has been even a bigger factor than this fixed or variable rate increase or Bank of Canada increase, is the fact that fixed rate mortgages, as of last night, they all upped again. They've increased by 1% over the past 3 weeks, which is almost unheard of. If we were to apply for a mortgage 3 weeks ago, we could have got we could have got you a rate of 4.5%. Today, that's well over 5.5%, which is just mind-boggling.
That's crazy. Yeah. I did
Really
not know
hurting a lot
that.
of people. No, because it doesn't make the news. It's not it's not as quote unquote sexy as the Bank of Canada, and now it's
Yeah.
about the bond yield market. So, but anyways, it skyrocketed. So to
Oh,
switch from a variable to a fixed, yeah, probably still makes sense. But if you did it 3 weeks ago, you're a lot happier than if you were to do it today.
for sure. Yeah. And so, like, if you were recommending a mortgage to yourself, your friends, your family, are you more apt to steer towards the variable or the fixed at this
I
point?
I right now I'm going like 100. Well, some clients don't want the variable. Some clients don't want a 5-year fixed. I'm 100% leaning towards a 1 or 2, maybe a 3-year fixed. But because we're seeing such volatile interest rates, like you might have the absolute best 3-year fix on the market today at like 5.2%, which today is amazing. But 3 weeks ago, that was a terrible rate. So
Right.
it's me. I don't want to lock myself into something too long when we're seeing fixed rates go, up and down almost every
Right.
week.
So fixed rate is ideal. However, shorter term is a safer way to go.
Yeah, like I'm working with a client right now who said, "Hey, this is my rationale for wanting to go variable, and it's the fact that he doesn't know if they're going to stay in the house long term, might move in with partner, whatever it may be. So the penalty to break a variable rate mortgage is significantly less than fixed rate mortgage. So
Okay.
that makes sense for certain situations. Variable rate makes sense, and this is coming from somebody who I love variable rate mortgages. Like I love them so much, so
Yeah.
flexible, small penalties, very advantageous. But in today's environment, it's quite expensive.
Yeah. Yeah. I feel like buyers were just kind of getting into their swing and excited, and this is prime time. But
100%.
now I'm not really sure what's going to happen. It will be interesting to see if they shy away or if they continue to just move move forward, because in reality, to rent something, you might as well own it, or you might
Yeah.
as well own something as opposed to renting, because the rental market is absurd.
And why is and like I get clients asking all the time, like, why is the rental market so absurd? One, lack of inventory, probably. Two, landlords are now paying a lot more for the house on their mortgage than they were
True.
a few years ago, or a year and a half ago.
Hmm.
Lots of different factors at play here, and it's hard to buy a house right now. So a
Yeah.
lot of people do need yeah. But I'm with you. If you're on the fence between renting and buying and you have the down payment, you can qualify. I think you and I have chatted about this a lot. You
Yeah.
date the rate, you date it. So you're not going to be with that same rate for the next 25 or 30 years.
Right.
There's opportunities to switch that up once rates eventually come back down.
Right. Now, has there been any changes with the stress test or anything like that? Things that will factor into the pre-approval process?
Yeah, not yet. Not yet. There have been chatters about it for quite a while, but still nothing. And I think it's the same reason why, what that would do if they do change the stress test, that's just going to
Cause more
probably
stress.
cause more stress. Yeah, exactly. That's going to probably, you know, make people or force people to buy out of their means. And so no changes as of yet. No new big mortgage qualifying updates or really news on that front. It's really just been the interest rate for the past year.
Right. Now, it was getting hot in here, so I had to put the AC on. But my other question was, oh, are you seeing an influx of seller/buyers coming to you and saying, okay, we need to sell, we need to downsize because we cannot afford this mortgage anymore?
Not so much. I haven't really had that. I've had a lot of upsizers, and or I'm sure as we've chatted about. But over the past few months, or the past month, it's been a decent time to sell.
Yeah.
There's been opportunities to make more money than you would have back in December or January.
For sure.
But no, I haven't really had the downsizers come out yet. I think it's just scary for everyone, because here's the issue with downsizing right now is, if a client wants to downsize, as we kind of chatted about, they need to kind of requalify at today's interest rates. So it's a lot more challenging unless they want to throw the whole whack of their the sale of the property of those funds into the down payment. It's going to be pretty expensive to have these rates. So they're kind of sticking with their 2 or 3% interest rate. And maybe when that comes up for renewal, maybe at that point they'll downsize. But
because you're gonna have to factor in the penalties and stuff too, right?
Yeah, which are increasing all the time. Yeah.
Yeah. So how often does the fixed rate mortgage or the fixed interest rate, how like, is that a scheduled thing, or is that
how nice
random?
would that be? How nice would that be? That would be the best thing ever. So historically, they'll probably stay the same for every maybe month or so. It's not, there's no schedule. It's just based on what's happening in if anyone wants to look up the 5-year bond yield market. When the bond yield market goes up, when it becomes more expensive, fixed rates increase as well. When the market drops, fixed rates are going to decrease. But it's been so volatile for the past year. So like from a mortgage broker's perspective, we get rate announcements or rate sheets every time there is a increase or decrease. So our inboxes, it's just like a joke in the industry now. Our inboxes are not even client applications anymore. There's nothing. It's just these rate sheets from 30 different lenders saying, hey, our interest rates are up, our interest rates are down, or like all this stuff now. So
I would love to see a chart with it just to see from a visual standpoint.
Gosh. Like for example, in December, fixed interest rates were 5.5% on like a 3-year fixed. Then 3 weeks ago, they were 4.5% on a 3-year fixed, and now they're back to 5.5, 5.6 on a 3-year fixed.
That's
which
crazy.
Is wild. Yeah.
Now another question, and then we can wrap this up. So based on a 1, 2, 3, 5-year fixed, is there a cheaper spectrum, more expensive? Obviously it's going to be more expensive the shorter it is that right?
You got it. Yeah, you got it. So the 5-year fix is still like, if you want the actual lowest interest rate on paper, then the 5-year fix is going to give you that. You will have the lowest technical interest rate on paper. If you want to pay the least amount of interest, the suggestion would probably be take a shorter term, because when that short term expires and you're up for renewal, the hope at least is that rates at that time are cheaper. So long term, you're going to be paying less interest. Short term, you're going to be paying a little bit more on a monthly basis.
Right. Okay. Well, that's all really good information. I always try to channel the buyer in me and then just kind of ask those questions, because I know a lot of people have questions and they're confused, and sellers too, not just buyers. But
you do a good job, because these are the questions I answer 3 times a day, every single day, which are you have that buyer's mindset, which is great. Yeah.
Yes. Yeah. Is there anything else you want to
add? No, not so much. Like I'm glad we kind of touched on the idea of like, hey, what do we think is going to happen in the market? Mm-hmm. I'm not entirely sure. Do you have it? Like, are you seeing any changes? Are your buyers or sellers like, were they thinking about this rate announcement? Do you think that has an impact on them?
Well, for example, so today I did a significant price decrease on one of my listings on Thursday or Friday. Of basically $90,000. I knew that we were too high. That was a given. We were having zero activity. It was crickets. And I said to them, based on the comparable homes and the activity, this is where we have to be. We were at 589.9. I made a strong suggestion of 4999, and we started getting a bunch of showing interest.
And so we got some wind. Here. There we go.
It is really windy here. And so lo and behold, we're getting all of this interest at this point, and we didn't have any stipulations. Like, we didn't have an offer date or anything like that. We did have 48-hour irrevocable in place because my client is 95 years old and we need time to like look over the offer, talk to family and all that stuff. But so I'm going to actually present 2 offers this afternoon to her. And I mean, I wasn't like anticipating that we would have multiple offers. I was kind of hoping that we would. So it just goes to show that if you are priced too high, it's just not going to fly. Like, buyers know, they're well versed in the house value aspect of things, but not to say that people don't want to compete. So, I do have 2 offers. There were 2 interested other buyers, but they didn't want to compete. So there's people out there that are willing to compete. There's other people out there that don't want to compete. I think the people who don't want to compete are buyers looking for a family home. I think the ones that are willing to compete are investors, just looking for a rental property or an investment of some kind, right? So yeah, it is very interesting. And I think it will continue to go this route. I don't honestly think we'll see such an influx of inventory that it's going to become a buyer's market anytime soon. Like, I just don't think that's going to happen.
Yeah. No, I hear you as well. I think we were there in November, December, January, where I don't know. From my perspective,
it was low then. Yep.
Clients are winning offers with conditions, ton
Yeah.
of conditions, and they're the only offer on the property, and that switched pretty quickly.
It did switch, and I did have buyers, getting accepted offers with conditions, and I was like, man, this is sweet to be back to this. This is great for buyers, right?
Yeah.
Of course, on a seller end of things, it's it is what it is. I mean, I understand from the buyer standpoint what they're doing, but I mean, it's always nice to be picking a firm offer, of course. But yeah, no, I think it's good. I'm quite surprised seeing how many offers are coming in. Like, of course, today I'm only dealing with 2, which is great, but there have been other houses with like 10, 11, 12, 15 offers. And I'm like, oh man, I'm sick of this. Yeah. I thought we were done with this.
We're back, or we'll see.
We're back.
Today's announcement, how that impacts like the mindset of buyers. But I'm always curious to see how these, what happens.
Yeah.
Looking forward to the next month update.
Yeah, we'll connect again, and I can't believe it's going to be July. That's crazy.
Unbelievable.
Feel like summer's like,
year now.
I know, it's awesome.
Yeah.
Okay, well, we will reconvene in July, and hope that everybody tuning in today got some value out of this, and keep tuning in, and we'll be doing this on a monthly. Take care.
Great. Thanks, Michelle.